blockchain, the open source, right? This more open source approach, and just get your thoughts on that, because it seems like that's another thing where people are like, yep, we're all about the blockchain, public ledger, sounds great. But other than like crypto or maybe some ether contracts, like it doesn't seem to be rapidly being adopted by the business community. And love to get your thoughts on that too.
Yeah. So we actually started, that was kind of one of the unique twists of Braintrust when we started was instead of, so we launched with a token, the Braintrust token, and what we use it to this day, what we use it for, we use it to bootstrap liquidity on the marketplace. So if you invite talent that end up signing up, completing a profile, they get some tokens, and you go trade these tokens on Coinbase. You could sell them for cash if you want to. If you refer a client, you refer Nike, and Nike starts transacting, you're going to get a percentage of Nike's billings kicked back to you automatically by the software in the form of the Braintrust token. So it was a really powerful way. It's one of the reasons we grew so fast. And now we have 1.8 million community members, many of whom have tokens, have earned tokens for doing things with the community. And so now our main growth driver is AI, has nothing to do with the token, but that's how we got started, and it works pretty well. There's a bunch of things I would have done differently.
Like what? I would love to know. That's because I think this is even less understood than AI.
Yeah. So we raised our venture funding by selling tokens instead of equity. And so we have, dozens and dozens of venture firms that, have from Cotu and Tiger, Homebrew and True Ventures, some great venture for Blockchain, Acme. And so they bought tokens, and we raised a Series B in November of 2021. It's probably like the day before the NASDAQ top ticked. It's just raised too much money. And then what happened was a lot of our kind of blockchain-based investors, they went under in 22 and 23. So they became forced sellers. So you got forced sellers in a low liquidity environment. That sucks, so the price is always going down, and that's a bummer for everybody. And we raised more money than we needed to. And that was like, we could have built this business with 25 million. We didn't need 100. And so then you've got all these forced sellers out there. And then the other piece was like, this one didn't hamper us as much, but I've seen it be an impediment in other businesses. Is like, people still don't know what tokens are, right? They kind of get Bitcoin. Bitcoin's broken out. It's like, okay, digital gold, probably not going away. But anything else, it's like crypto is just associated with scams or the FTX debacle.
Yep.
I always, when FTX collapsed, I was like, man, I'm feeling lucky. Like, I didn't invest in FTX. I didn't use the exchange. I didn't hold any of their token. I was like, I'm going to be fine. But no, none of us were fine. That thing
Sure.
it took 10 years out of all of us.
Yeah.
And so look, I think the Braintrust token is not an important part of our growth story now, but it did help us grow in the beginning. But to your earlier point, like I'm not seeing it adopted. Blockchain technology is really not being adopted anywhere but outside of finance. I think decentralized finance, DeFi, is incredibly interesting. We're going to bring real-world assets onto the blockchain, bring liquidity to currently illiquid things. I think that's an awesome killer use case for blockchain. Might be the only one.
Yeah. I'd love to just go back a half a step here, because I kind of understand blockchain and tokens. Like I own some Bitcoin and Ether just to hedge, but this is fascinating to me. So you raised money without giving up equity. You tied it to a token, and I'm trying to understand how that token has implicit value.
So great question. It's a big part of the story. I actually skipped over. So the token is distributed to people who do measurably helpful things like refer talent, refer clients, and then we use a portion of the profits of the business to buy tokens out of the open market, right? So the bigger the business grows, the more dollars go to buy the token, and they get taken out of circulation. They go to what's called a DAO, an on-chain wallet. If you go to info.braintrust.com, you could see I think something like 12 or $13 million so far has gone to repurchasing these tokens, and it takes them out of circulation. So that the
Creates a
operations of
market.
our business create the economic demand for the token,
Okay.
and then it's distributed to people who verifiably help the network. So that's how
Yeah.
our token economy works.
So if you're, that is freaking amazing. All right. So you go out, you raise money, you say, look, I'm just going to make up some numbers here. For a $10 million investment, you're not getting X amount of the company percent wise, but you're going to get this many tokens. We're going to create a market for these tokens because the bigger we grow, the more we're going to just buy these tokens out of the open, almost like a stock buyback, for said another way, which will raise the price of the token because there's less supply, and we're going to create the demand. And if you're an investor, you decide when you want to sell that token. You may want to wait until we've bid it up so much because we keep buying back so much, or if you're ready to take some money, off the table and triple your money, whatever, instead of waiting for it to quintuple, it's your choice. But you don't have to wait for a liquidity event to get your money back out.
That's exactly right.